Stocks trade firm on the back of a good crop of earnings reports, but global uncertainties reign in. The optimism, real estate and metals lead gains, while utilities and healthcare are drags.
The Bajaj Finance stock perks up after its Q4 performance beats estimates, and while IT points to some moderation in margins ahead, the growth outlook remains promising.
Godrej Consumer may seal a deal to buy Raymond's consumer business, sources tell CNBC-TV18. The move can give Godrej a significant presence in the fragrances and sexual wellness categories.
Stocks of life insurance majors HDFC Life and SBI Life swing in opposite directions post their earnings. That reveals a stark contrast in Q4 growth and outlook due to their business mix.
L&T Tech, Indus Tower and Syngene gain on healthy performance, while a weak report hurts Voltas. City Union Bank jumps after its CEO gets an extension. Lupin sulks as investors await a key drug update.
Hello and welcome to Halftime Report. I'm Ekta Batra and I have with me Prashant Nair today. So we have a little bit of deficit in terms of anchors. We have Prashant sitting in on Halftime Report. But nonetheless, Prashant, welcome to the show. It's a quiet day of trade. It's range bound. The Nifty is trading in a range of around 60 odd points. There seems to be this big time-wise correction which is taking place for our markets at this point in time. But we have a lot of result reactions, a lot of stocks in news. In terms of result reactions, Bajaj Finance that we just alluded to, insurance stocks in focus, and a lot of results awaited. So we are waiting by for Hindustan Unilever, which will be reporting numbers from the FMCG space, Axis Bank post-markets, and of course, Wipro and Techem as well.
I mean, it's a slow drift higher, right? We had that 1,000-point big, huge, frenzied rally that ended the week before. Last week, the market was sideways to slightly lower. And this week, it has been, 20 points, 25 points, 40, 50 points every day. But, slow and steady, but the market has been moving higher and higher. And today is no different as well. Gentle kind of slope, incline upwards is what you have. 17,853 is where we are at in the Nifty. By the way, we are very close, just 10 points away from an important level. And this is the level I've put out over the last many days. 17,863 is the high that the Nifty made last Monday. That was a swing high, after which the market saw a bit of a consolidation lower. The market sold off all of last week. So 17,863, we are just 10 points away. And a solid close above that, I think, opens upsides to the 18,100 kind of levels. Those are next technical levels, which will come into sharp focus. Let's just have the Bank Nifty up as well. Just a quick look at it. I mean, the Bank's index has been stronger than the Nifty for some time now. And that is up as well, not very much, but 42,893. Bank Nifty, unlike the Nifty, is already past the previous peak. So that's why we're saying it's stronger. And Nifty now just within 10 points, 12 points of the previous high as well. But it is all about single stocks. It's been that way for the last 4 or 5 days. And boy, I mean, there is no dearth of large moves to address in terms of these moves, 5, 10, 15, 20%. In a variety of moves, which we will talk about. Let's talk about the big deal, which we may hear about later today. So the deal is expected to be announced in the FMCG space. This is Raymond and Godrej Consumer, the two companies we are talking about. Shilpa has got the details. There are 2 press conferences Shilpa will be attending today as well. Shilpa, tell us more. What are you picking up?
Well, a deal is set to be announced today between the Godrej and Raymond groups. What we're given to understand from our sources is that Godrej Consumer Products is set to buy the FMCG business of the Raymond Group, which is Raymond Consumer Care. Now, Raymond, the listed entity, has about a 47.6% stake in Raymond Consumer Care. And in fact, the company has been looking to sell off this FMCG arm for a while now. In fact, last year it was in talks with Good Glam Group for about a 2,500 crore deal, which fell through eventually over a valuation mismatch. Now we're given to understand that a deal is going to be announced later in the day, with both companies holding press conferences. Now, while the contours will be known later, this deal, remember, will give Godrej Consumer a stronger presence in the personal care segment, with a strong portfolio coming in from Raymond in the men's grooming space, and it will also give it a foray into sexual wellness and fragrances also. Remember, currently GCPL operates only in the hair care, home care and personal care categories, and these brands of Raymond, which is Park Avenue for personal personal care, deodorants, and other men's grooming products, Kama Sutra for condoms and sexual wellness products, KS Spark for deodorants, and Raymond for premium fragrances is what the portfolio of Raymond currently looks like. And in addition to this, could augur well for GCPL. Now, remember, Raymond Consumer Care clocked sales of about 522 crores in FY22, and the company currently has a manufacturing facility, just one for condoms in Aurangabad, which has about 400 million units capacity per year. So how the deal plays out and what this actually means for both companies, that's something we'll bring back to you later in the day. Back to you.
All right. Okay. Thank you very much for that. Ekta, the question is how much of this perhaps is in the price. Whatever is announced, I don't know. But mind you, in the last 1 month, Raymond, the stock is up 40%. And it's been a frenzied move over the last 10 days especially. So I don't know if the market got a whiff of it, but it's up 40%. And from pre-COVID levels, which is from Feb 2020 levels, it's up 3 times. So it's
been a huge outperformer in terms of Raymond and the stock performance. So maybe a lot of it is already factored in. I just remembered that, Mankind is coming in with a similar set of consumer brands as well. So there's so much interest in something which you can see, touch, feel, and sort of access.
Did Mankind, was it about 90% overall, right?
I think it's subscribed as well.
Okay.
So that'll be interesting to see, because that's where there seems to be a lot of frenzy in terms of the market as well. But nonetheless, let's in fact apprise you of the fact that Gautam Singhania will be addressing that press conference later today at 3:30 p.m. to share the details on this group-wide strategic corporate action. Do not forget to tune in to this piece of news. All right, let's move on to another piece of news then. Sources are telling CNBC-TV18 that Surya Roshni is likely to consider a business realignment along with its Q4 numbers. So what exactly is this business realignment? Vivek is here to tell us more.
Well, thank you so much for that. So what we are understanding from our sources is that, number one, Surya Roshni will be considering its Q4 and, FY23 results today. We understand that during today's board meet, what is likely to happen is that the board is going to discuss the demerger of, the consumer lighting business that the company has and, the lighting the steel division that the company has. So we'll be demerging the lighting business. It's been a long pending ask of the shareholders. In fact, shareholders have been pressing the management to go ahead and do this demerger for quite some time. In fact, the main reason or the main rationale for this particular move is that the company is looking to value unlock quite a bit as far as both of its verticals are concerned. And when you're talking about the revenues and the financials, FY22, steels and strip contributed almost 6,400 crore, while the lighting business was around 1,330 crore. 9 months FY23, steels and strips contributed 4,730 crore, while the lighting and consumer business has given close to 1,100 crore. So what we did is we reached out to the management. They haven't yet responded to our queries. We went through the con call transcripts of Q3 as well, where there was a clear direct question asked by analysts to the company, as to what exactly is are they considering a demerger. So the management did allude to the fact that, at this point of time, the steel business is actually doing much better than the lighting business, which wasn't the case earlier. And for the benefit of the shareholder, it will be better if there is a demerger. And what the management said was that, board approval would be required for a demerger. So we understand that today's board meet, there is going to be a discussion, and we are anticipating, some movement as far as the demerger of the lighting business is concerned.
That's an interesting story. Vivek, the steel business is far more cyclical, right? I'm assuming?
Absolutely. Up till FY 2022, the steel business actually wasn't doing quite well, and the lighting business was the one that was saving the day as far as the company was concerned. However, given the fact that the competitive intensity in the lighting business was something that, got really high, the management actually has, even mentioned in the conference call that the steel business is the one that's actually seeing much better margins and is doing much better. So, which is why at this point of time, they want to have separate focus on both of these verticals is what we are understanding.
Okay, I think the HUL numbers should be hitting the screen soon enough. They have already hit the exchanges, so we'll just wait by for that. That's the Hindustan Unilever numbers that we are waiting by for. Just to put it into perspective, the stock had gone in a little weak into the numbers. So let's see what they deliver. So that's the HUL Q4. Net profit has come in bang in line with estimates. So 2,552 odd crores is where it's come in versus our poll of around 2,580 odd crores in terms of what they have delivered this quarter. So the stock, however, a little weak at this point in time, down around 1.3%. I'm just going to try and pull up the press release, but in the interim, Prashant, any more details? Okay, that's the revenue, which is actually missed estimates. 14,893 crores is where it's come in versus our poll of over 15,200 crores. So that's probably where the miss has come in. The revenue has come in lower than estimates. However, they have maintained their profits. So let's see, maybe the margins have been maintained this time round in order for them to come through with the profitability, which is in line with our estimates. We'll wait by. EBITDA has come in at around 3,471 crores versus our poll of around 3,650 odd crores. So those are the basics which have come in for HUL. It's in line with when it comes to the bottom line, but there's definitely a miss which has come in on the revenue as well as the EBITDA margins. As you can see, it's around 100 basis points miss, thereabout 60-70 basis points miss in terms of the margins. 23.3% is what they've reported. The street was working with around 24%. As you can see, the stock is lower by around 1.5% at this point. Prashant?
We'll get the volume numbers as well for the India business. We'll figure out what that looks like. Always a key to watch there. I mean, this is a giant and, numbers missing a little bit. I think the disappointment would perhaps be on the margin front because there was expectation that margins perhaps would be steadied after all the input price pressures we've seen over the last couple of quarters. But let's get this to Abneesh Roy of Nuvama Institutional Equities, who's also getting the numbers that we're getting. Abneesh, good to have you with us here. What do you make prima facie of the numbers? We have operating profits, margins and revenue so far. Go on.
Right. Yeah, so versus our expectation, the numbers are largely in line. Versus street, you're right, it is a bit lower. Especially after the very strong numbers from Tata Consumer and Nestle, there was an expectation that maybe there is a beat here also. But for HUL being such a larger category and there were still inflation in parts of the portfolio like detergent, foods, etc., it's slightly lagged effect also. And important to note that for HUL, even in base quarter, the margins were still on the higher side. My sense is from Q1, you will see the improvement in trajectory in terms of margins. And clearly, the rural slowdown, which we had called out earlier also, that does impact HUL's mass end of the portfolio. So overall numbers slightly below street expectation, but versus our expectation, it's fairly close.
Okay. Based on what they have reported right now and the numbers that we're working with, Abneesh, what is the volume growth that you're anticipating? We were working with a range of around 5 to 6 odd %.
Yeah, my sense is it should be close to that 5 to 6%. Of course, pricing remains a key thing to watch because there has been anniversarization in soaps. There have been more price hikes in the part of the portfolio in foods and slightly in detergent. So that remains a key number to also see. But yes, overall sales, when I see our estimate, it's fairly close. And we were also at that 5 to 6% volume growth. So it should be similar. But yes, pricing growth remains a key monitorable. And we'll have more clarity once we have that.
Domestic volume growth at 5%, Abneesh. That's what's coming through.
Okay. Yes.
Yeah. So I think this is around what was being expected, right, Abneesh?
Yeah, 5 to 6% was the number, expectation had built in. Yeah. Of course, this quarter, if you remember, Feb and March, the royalty was also higher. So that also there is going to be some impact in the miss. That also will be part of the reason. And of course, as I said, in detergent and food, still it was inflationary.
Okay. What are your expectations in terms of margins going forward, Abneesh? 23.3% is what they've reported this time. As we go into FY24, what are the headwinds that they could probably face and the range that you're anticipating?
Yeah, I think clearly for some FMCG companies already margin recovery has started. So we would see that from Q1 the margin trajectory will go up because packaging cost and palm oil cost clearly is down. We also need to see El Nino, how does that impact HUL's food portfolios, raw material in terms of milk, wheat, etc. Wheat initial data was quite worrying, say 3 weeks back, but now the way the outputs are coming, it seems quite better than initial expectations. So yes, I would expect HUL to come back to the 24 to 25% EBITDA margin in the coming quarters. So I don't see a problem there.
Is there a change in your pecking order after you've seen the likes of Nestle report, a very good set of numbers?
So yes, our topics, Tata Consumer is also good. But yeah, in our topics, we have ITC, Britannia, GCPL and HUL. So as of now, no. But yes, Nestle did report better than expectation and Tata Consumer also. So overall, yes, we are seeing that some companies already are seeing benefit of the gross margin recovery. In HUL's case, as I said, the base was also on the higher side. From Q1, the base effect will definitely help HUL, and also the full benefit of the lower cost should help also.
Okay, I'm going to change track now. Okay, all right. Positive on HUL. Not too worried about the margins. There is gross margin recovery, which you are noticing in the FMCG space. So they should probably revert to margins of around 24 to 25%. But I'm going to change track, Abneesh, before we let you go, and quickly ask you about this possible impending deal between Godrej as well as Raymond for their consumer brands. What are your preliminary thoughts on it, albeit on the fact that it goes through?
Yeah, in any M&A, we need to wait for the actual deal to happen. But yes, definitely deal value and valuation will be key. My sense is because of the liquidity dry up, valuations in general in M&A has corrected. So that's one thing. Clearly, the scale-up of distribution will be a big opportunity for GCPL if they acquire, because GCPL has got a much wider and deeper distribution, so that should help. In terms of other issues which we'll track is how does the brand architecture work out, because same brand of Park Avenue is there in apparel also, in Dio also. So we need to see how that pans out, and is there any royalty connect or royalty agreement also. Apart from that, definitely is the acquirer going to be interested in all parts of the portfolio? How is the gross margin, EBITDA margin? So overall, valuation is key because the acquirer will have ability to scale up, but then it has to be a rational multiple rather than on the higher side. So anything in the 3 to 4x EV to sales, I think that would be a reasonable price given the valuations for M&A have corrected.
Sorry, 3 to 5 EV to sales.
3 to 4x will be more reasonable for us.
Okay,
yes.
All right, fair enough. By the way, Abneesh, just a correction. I think the 5% growth, volume growth is for the full year. For the quarter, it's 4% for HUL, volume growth. So that'll be a little lower.
It's slightly below, yes. Then it's slightly below because street was at 5 to 6%.
Yeah, got it. By the way, do you track, just to go back to Raymond, do you track Raymond, Abneesh?
No, we don't track Raymond. We track Godrej Consumer.
Godrej Consumer. Okay, got it. I mean, the Raymond stock is the one which has gone absolutely, 40%, as I said, very quickly in the last month and a half or so, and of course, more over a longer period of time. Abneesh, thank you very much for running us through what you're making of it. We'll, of course, track the deal. Abneesh saying anything between 3 and 4x EV to sales would be the right kind of multiple in the current environment in that business. We'll slip into a quick break here in the first of the show. But the markets, right there, 30 points, 17,844 is where the index is at this point in time. We are back with more on market, specific stock action, more earnings, of course, which we'll put the spotlight on in just a bit.
%100% happiness with SBI Home Loans. 0 processing fee at 8.50% onwards. Apply today. Call 1800112018. Visit homeloans.sbi.
The new Fiamma Mint Charcoal Soap. refreshing fun.
तेरी रोशनी हूं मैं, किस ना।
कमाल की कार है ना, हमें ले लें क्या?
सर, कमाल की कार के लिए कमाल का पेट्रोल भी चाहिए, एकदम टॉप का, जो हमारे इंडिया में मिलता कहाँ है?
अरे सर, पर इंडियन ऑयल पे मिलता है। प्रीमियम कार्स के लिए इंडियन ऑयल ने बनाया है 100 ऑक्टेन वाला देश का सबसे प्रीमियम पेट्रोल, XP 100।
वाह, इंडियन ऑयल की बात ही कुछ और है।
इंडियन ऑयल, पहले इंडियन फिर ऑयल।
Mankind Pharma Limited now makes an initial public offer of equity shares of face value 1 rupee each for cash at a premium. The 100% book built offer being offered in a price band of 1026 rupees to 1080 rupees per equity share. Opens on 25th April 2023 and closes on 27th April 2023. For risk factors and more details, refer to the red herring prospectus.
Okay, welcome back. So we've got the market, which is 28 odd points or so higher. So it's a similar kind of picture when we started at 12. Now, IPCA has been in focus all of this week, and it's I think recovered a little bit from the lows, but it's down for the third straight day in a row. Ekta, what's the conversation around this one? What are valuations also looking like now?
Well, valuations, for example, there have been brokerages which have scaled down their valuations because of the Unichem deal. But I'm actually not talking about the Unichem deal. It's a significant development which has taken place for IPCA, where the US FDA has inspected their formulation manufacturing facility, which is basically at Piparia, which is Silvassa. Now, their Silvassa facility has been inspected. It manufactures formulations. Now, why is this important? Is because this particular facility has had an import alert on it since 2015. This particular inspection took place in April, just a couple of days ago. It ended yesterday, April 18 to April 26. And the US FDA has issued 3 observations to this plant. Now, it is very interesting because they did hold a conference call and they had indicated that they hadn't seen much movement on all of these facilities. But now they have informed the exchanges that this particular plant was inspected, issued 3 observations. We don't know the nature of the observations, but it is significant that a plant with an import alert has now been re-inspected by the US drug regulator. They have a total of 3 plants which have been under the import alert since 2015. Their Ratlam API facility, which got partial compliance during COVID, for HCQS. And separately, their Pithampur formulation facility and now the Piparia formulation facility. So 3 of them been under import alert since 2015 on. 1 has been re-inspected.
The 3 plants under import alert was one of the reasons I heard somebody saying, well, that's the reason why they've gone in for the Unichem
That's exactly. That's
acquisition, because they
allows them that re-entry into the US. And, I heard the call and they were very bullish on Unichem's assets. They said Unichem has a vanilla generic business when it comes to the US, but they have extremely good assets. So and 55% of their sales are from the US. So that was the key point.
Okay, well, maybe things will turn the corner for IPCA sooner rather than later. We'll take a very quick break here. Another one, Aditya Agarwala will join in with some technical trading ideas on the other side. Stay with us.
I'm a chameleon. It's my job to change color. But your wealth manager? Well, they shouldn't be copying me, you know that. Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
I am he.
right.
Blue Star Inverter AC with fast cool technology. Bye bye heat. Blue Star.
गुणवत्ता की बात चली है, एक नई शुरुआत मिली है, परिवर्तन को गले लगाकर अपनाएंगे Z। प्रोडक्शन भरपूर बढ़ेगा, प्रॉफिट भी अब खूब चढ़ेगा, काम को नई दिशा दिखाकर अपनाएंगे Z। चलो देश का रूप निखारें, पर्यावरण को हम ही संवारें, प्रदूषण से बचाने को अपनाएंगे।
Register with Ministry of MSME's set certification scheme today and help India become a global manufacturing hub.
कैसे करते हैं ट्रेड?
Drive 5 पैसा। Upcoming corporate action या news flow, किसका हुआ merger, कौन है नया CEO?
Financial data मिलेगा अब हाथों हाथ, fundamental analysis से अब बनेगी बात।
जानो हर स्टॉक जो है ट्रेंडी, टेक्निकल एनालिसिस से भी लगेगी फ्रेंडली, क्वार्टरली रिजल्ट्स होगी सेंड, लक बाय चांस इन्वेस्टिंग का होगा दी एंड।
With 5 पैसा's in-depth company information, always stay up to date.
ऐसे करते हैं ट्रेड।
सोच मत छोटे, install मा। Investment in securities market are subject to market risk. Read all related documents carefully before investing.
हमारी प्रार्थना होगी स्वीकार।
Z-Black Premium Agarbatti and Dhoop, official prayer partner, Delhi Capitals.
Welcome back. Well, let's get talking about the technicals of the market. We have Aditya Agarwal joining in to discuss what he's tracking this afternoon. Aditya, hi, welcome to the show. Well, we have a lot of, FMCG stocks which are in focus. So, for example, HUL, which is down around 1.5% post numbers. We have Dabur, which is a bit sluggish as well. And we have Godrej, which is in focus ahead of a possible deal. So, can you just tell us what your call will be on these specific stocks?
Good afternoon, Ekta, and thanks for the show. Clearly, there's a bit of a selling pressure that we are seeing in HUL, and that is likely to continue. So maybe I would not want to get into an HUL at current levels because there could be some more correction in the offering in HUL at current levels. So it is clearly an avoid at the moment, and it has been underperforming the FMCG pack for some time now. If I have to pick something from the FMCG, it could be a Dabur, as you mentioned. That is definitely looking strong on charts. And second could be a Nestle, which has been outperforming post numbers. And in the run-up to the numbers as well, it did well. So both the stocks, Dabur and Nestle, will be the top bets if I have to pick something from the FMCG pack, and would clearly avoid HUL at current levels. Maybe after a 2-3% correction or consolidation is when I could look at it, not at current levels.
All right, Aditya, thank you very much. Good getting those ideas from you. Appreciate it. Well, just a quick word on the market, which is up 30 points. The two IT names which reported, LTT has reported earlier, KPIT reported numbers during market hours yesterday. That is up on 3.5%. It's come off the high point of the day. LTTS is the other one, which came out with numbers, 8% on that one. We spoke with both companies. And then, of course, you had Coforge, which reported numbers. There was a margin miss, but revenues were good. Stocks up about 1.5%. Actually, let's go across to the conversation my colleague Reema had with Sudhir Singh, CEO and Executive Director at Coforge. She began by asking him about the rationale behind the 13 to 16% growth guidance amidst persisting macro uncertainties. Listen in.
So we expect the macros to continue to be depressed through FY24, and that's something that we've baked into our forecasts when we offered the 13 to 16% growth. The one thing that's differentiated us so far in the results that I have seen in Q4 has been not just the fact that our numbers were where they were 5% sequential growth. To my mind and to our collective mind at Coforge, what was more important was that our growth was broad-based. We grew across client size cohorts. We grew across verticals, across geos, across service lines. So what gives us comfort is the fact that the ramp getting into fiscal year 24 in our case, given the 5% sequential US dollar-based growth, is obviously very steep. What we need to do is just around 3% growth sequentially over the next 4 quarters to hit a 15% number. We don't think that's in the realm of the impossible. We think it's very, very possible. And our intent will really be to A, make sure that we secure that, and then make every effort to try to exceed it in fiscal year 24. So what gives me confidence in summary is the broad-based nature of the growth, the fact that we aren't reliant or relying on one vertical or one geo or one or two clients to drive that growth for us. And the second thing, of course, is even in a macro like this, if you look at our performance in the quarter that went through, we called out the fact that we closed 2 large deals. We also equally importantly said that the quarter that has already started, quarter 1, we are 1 month into it, we expect the deal velocity to continue. Our next 12-month signed order book is $869 million. That's more than 20% higher than where that same metric was 12 months back. So it's a mix of all of this, the RAM that we have, the order book that we've signed, the deal velocity that we've seen and continue to see. And the fact that all we need to do is clock about 3% sequential for 4 quarters. That gives us the comfort.
You said your guidance bakes in macro uncertainty. Could you elaborate a bit more? Have any of your clients cancelled any projects? Are they going slow on ramp-ups or projects have been deferred? What has been the extent of growth loss due to the depressed macros, as you called it?
So it depends on which industry you touch, and in a macro like this, almost any enterprise client across the world has clearly elongated their decisioning cycles and is taking a microscope to just about any spend area. So that's a given, that's a reality. We aren't assuming or baking in something that hasn't been in play for the last 3 odd months. That's how we're seeing the macros. If I were to parse that out into how we see it by industries, there's obviously a reasonable amount of diversion, a difference, right? Banking, the pressure is incredibly high, especially in sectors like mortgage. From our vantage, we are assuming that we will not touch the kind of growth that we saw in fiscal year 23 in banking at all. Fiscal year 23, we grew 47%. Our assumption is growth will slow down very considerably, and growth will be roughly only around 15% in banking. When it comes to insurance, it's a different story. The space that we play in is largely commercial specialty SMB. Commercial specialty SMB continues to see resilient demand. It's the LNA side where we are seeing more of cost consolidation. And insurance, the other factor that's playing up well is our penetration into newer geos in the insurance vertical is working well and likely to continue to work well. Quarter 4, illustratively, we talked about 10 new logos being added. 4 of them came from insurance in Asia Pacific. So that's a growth vector in insurance. And finally, travel is a completely different story altogether. The commitment, the confidence that travel clients, particularly airlines and airports, have right now is very, very significant. So we look at macros by verticals. The story is divergent. Banking, we see very significant headwinds. We are baking all of it, creating a composite picture, and hence calling out the 13 to 16% growth that I talked about.
So basically, since you said growth is going to be broad-based in FY24, all your 3 key verticals, banks, insurance, and travel hospitality, will all see a growth of about 15%, right?
That's right. It's going to be broad-based, and it's going to be not as dispersed as it was in FY23. That's
so
right.
This basically means that insurance, which actually de-grew, is going to grow quite handsomely. And it's only because the space that you operate in is seeing resilient demand.
Well, insurance, it's not a forward-looking view only that we're offering. Quarter 4 that just closed, insurance has been the fastest growing vertical. Insurance for us in quarter 4 has grown 5% sequentially already. So insurance has a really good ramp getting into FY24, and all we're talking about is a 15% growth. If you take out fiscal year 23, for the previous 4 years, insurance was the growth driver for Coforge, and we see insurance normalizing and coming back to its usual performance levels for us as a business unit.
Can we talk a bit about margins then? So the complaint is that despite a strong increase in your jump up in your offshoring, I think last year went up by nearly 500 basis points. The rupee has seen a 10% depreciation. There has been a pickup in utilization, yet the improvement in gross margins is not as much as what the street would have liked, even if we take into account your hedge losses. Can you explain what happened on the gross margins? Are you getting more aggressive on the deal front? Is it just purely investments in employees? And why is the gross margin improvement limited to that point?
So gross margins, actually this the year that closed was a good story for us. Our gross margins during COVID had dropped significantly because of the pricing pressures that we saw on the travel business side. This has been a turnaround year for us. Our gross margins have gone up 55 bips in FY23 over FY22. More importantly, today when I gave the guidance, I very clearly called out FY24 over FY23 will again see another positive blip of 50 bips. A lot of the questions that we're getting is why is the gross margin increase not flowing into EBITDA? And we're pretty clear on that. When macros are uncertain, it is imperative that one presses the pedal on growth, tries to achieve minimum guidance offered and exceed it. That's the approach we are taking. Once the SG&A hits 15%, that's when we're going to take the feet off the pedal when it comes to investments and make sure that we let some of the GM increase fall down to the EBITDA as well.
When do you think the SG&A percentage, as a percentage of your revenues, hit 15%, which is the target that you have in mind in terms of investments?
I think that's going to be a tactical call. We have a reasonable amount of dispersion on gross margin on a quarterly basis. So we'll keep looking at how gross margin is trending. We'll keep looking at how the margins, how the market is faring. We would like to make sure that we continue to invest. The percentage 50 odd bips is likely to move up or down. Difficult to call out the quarter it's going to hit 15%.
Okay, so then in another way, do you think FY25 onwards, once the investments that you've made in the company are perhaps close to completion, will margins start improving? And what would be the long-term aspirational margins for Coforge?
No, absolutely. FY25 onwards, EBITDA also should start moving up. In FY24, gross margin, I've already called out, will go up. Our aspiration is that at the point when we hit $2 billion, our adjusted EBITDA should have gone up by a minimum of 150 bips, and in a very positive scenario, all the way up to 300 bips. So Coforge at $2 billion compared to Coforge at $1 billion today should have an adjusted EBITDA between 150 to 300 bips higher than where we are today.
Thank you very much for that number. And just one final question. Your deal wins are down on a quarter-on-quarter basis. Should we read anything into that?
No, I think the only thing you should read into our deal wins is that we are still closing deals in the kind of macros that we have. Quarter 3 was an aberration. Quarter 3 this year saw 5 large deals, which is the highest in the 40-year history of the organization. So quarter 3 is not a great reference. What we feel very positive about is that quarter 4, when there were the kind of headwinds, especially in the banking sector, we were able to sign a large deal in banking. Another one, of course, came from travel. And the other thing that we very explicitly, very consciously, very clearly called out in the investor call today is, even in the current quarter, quarter 1, where 1 month is already over, we expect the deal velocity to continue to be robust.
Okay, so that's the management of Coforge. The stock is up around 1.5% at this point in time. Just watch out for Nestle, because that stock has gained over 2% on a week-to-date basis. And contrary to what we are seeing in a stock such as HUL, which is down around 1.5% post numbers, we are seeing Nestle hold up with a gain of around 0.4%. It has already reported numbers. It was a good set of numbers. So there is another FMCG company which is in focus on account of that. Maybe Tata Consumer should come up for you as well. That one reported numbers too. Let's see how that one too is doing. Time for a short break. On the other side, we'll put the focus on some of the IT stocks on account of Q4 numbers.
अभी तक मटेरियल आया नहीं, पैसे नहीं है। अच्छा,
यूप्रो कैपिटल का ग्रोएक्स ऐप है ना, अब आपको भी मिल सकती है नॉन स्टॉप बिजनेस करने की आजादी।
इतनी जल्दी?
Hey buddy.
Hope you like them. Introducing Apollo Alpha. Add more thrill to your beast.
This one's a turbo.
1.5? Nice.
The all-new Hyundai Verna. Futuristic, ferocious.
The last hour. Anything can happen between the bells. But what happens during the last hour is what matters the most. The biggest market swings. A close-up look at what's driving them. And how the investors are reacting. Watch the most seasoned market mavens guide you through the most important hour of the trading day. NSE Closing Bell. At these times, only on CNBC-TV18 and CNBC-TV18.com.
Co-powered by IBM.
When our big boss was MD, he used to take care of us.
And our Prince Sahab is busy ensuring his family. Oh, big boss, you?
He's busy obtaining term insurance for his family. After all, office is also our family, am I right?
Let's close the deal.
Thank you.
Verma ji, will you have tea with this prince?
LIC's Group Term Assurance Plan takes care of your office family.
Welcome back. Well, there is some amount of a pickup which is taking place within the broader market. So it's up around 0.5% currently for the mid-cap index. In terms of key numbers today from the IT space, we do have a couple of numbers to watch out for. The likes of Emphasis will be reporting numbers, Wipro from the frontline space, TechM as well. So that's probably going to set the tone in terms of a stark comparison, at least in terms of what frontline IT would report versus the broader market IT stocks. In fact, let's stick with it. L&T Tech disappointed the street on margins even as revenue growth was strong. For the next year, the company has guided for 20% revenue growth, which includes 10% organic growth, while margins have been holding above 18% for the last few quarters. The street was worried about margins declining in FY24 once the SWC acquisition got integrated. Listen in to what the management had to say on the margin picture.
With the amortization, etc., all the expenses put together, we've guided in the 17% range is where we will be for the year and the quarter as we move forward. And we have an aspiration to get back to the 18% levels in the first half of FY26. So that's as far as the margins are concerned. If you remember, when we came back, when we did the acquisition, we'd actually guided 180 to 200 bips lower. But we've slightly been able to improve that when we came in with the 17% range back in terms of the EBIT guidance.
As L&T Tech, in the ER&D space, autos is a significant component, but KPIT, of course, is a completely auto ER&D play, which also reported numbers. They've guided for FY24 margins of between 19 and 20%. This suggests it's going to be another year of margin improvement demand trends also, according to KPIT, look pretty strong. They say that a macro slowdown will not mean very much for their business because they usually work on 3 to 5 year projects which are already in the bag. They're already tied in that sense. Let's listen to the management. We spoke about them on the slightly longer term outlook for the business from here.
The quality of work continues to go up. And we believe that will help us to increase our margins a little bit more. And this year will be between 19 and 20%. We believe that in the next year or two, we'll continue to have profitable growth. The point is to go beyond 20% next year and the year after. It will be similar to the growth, that we are likely to see in the new year as well. I don't want to say flat in the sense 36%, let's say out of that, the growth was the organic growth was in the range of 27 to 30% last year. And this year we are also calling out 27 to 30%.
Okay, all right. So those are a couple of numbers and KPIT which reported numbers, but there are a lot of earnings which are expected both from the large cap as well as the mid cap IT names. Reema's here to tell us what we can expect this time round.
Thanks so much for that. So there are 4 IT companies whose earnings we'll be tracking today: Wipro, Tech Mahindra, LTI Mindtree, and Mphasis. So let me start with the large cap boys first. On Wipro, the key number will be their quarterly guidance. Next quarter, we are anticipating a muted guidance, -1 to +1%. Also, secondly, watch for the margins, because Wipro's margins went to a multi-quarter low. They went down to 16%. But the company's aspiration is to improve the margins to 17%. So the guide path to improving margins. Now, Tech Mahindra had also had a weak Q3 performance because many of their top clients were headwinded. And this is likely to impact performance even in the current quarter. So we're anticipating a constant currency revenue decline in Q4 by -0.4%. Also, secondly, watch for the deal wins. The deal wins have been strong for the company for the last 5 quarters, above $700 million. Does that trajectory change? When it comes to LTI Mindtree, well, LTI Mindtree's key miss in the prior quarter was their margins. In Q3, their margins declined by 360 basis points. So in Q2, their margins were more than 17%. It came down to 13.9%. So the margin improvement trajectory is going to be very crucial. And finally, for Mphasis. Now, Mphasis has been an underperformer because its BFSI exposure is more than 60%. In that, particularly, the mortgage business has been declining. And that's the reason why, for the second consecutive quarter, we are expecting Mphasis' revenues to decline on a sequential basis. Back to you.
All right, Rima, thanks very much for that. So that's IT in focus. We're still about 40 points higher on the Nifty, which means we are about 15 points away from that 17,863 level, which, of course, is the first resistance to take out and close above. Let's see if we're able to do that today. We'll take another quick break here. We put the focus on Lupin, which is trading under pressure. Stay tuned. That's coming up in just a bit.
It's okay for us to nod for everything, because we are parrots. But your wealth manager? Shouldn't be doing that. You know?
Choose Nuvama. We only do what's right for you and your money. Nuvama. Let's do it right.
After the resounding success of India Inc. On the Move 2022 in Gurgaon, this year we're coming to Mumbai to explore how sustainable practices are the key to long-term success of the manufacturing industry. Get valuable insights from industry luminaries, experts and policymakers on how your business can prosper with this new paradigm for growth. Only at Forbes India and CNBC-TV18 present India Inc. On the Move, Sustainable Manufacturing, powered by Rockwell Automation.
We are all different, but our soul is the same. We go wherever life takes us. And we do it in our own way. Because it's our differences that make us who we are.
कैसे करते हैं ट्रेड? Try 5 पैसा. Powerful charts and research tool. One-click trade is the new cool. Get access to live market data. Margin funding bhi hai re beta. 5 paisa app karo install. Trading made simple, simple for all. With 5 Paisa's wide range of products. Yahan wahan chahe ho jahan. Simply trade on the go. Aise karte hai trade. Soch mat chote, install maar. Investment in securities market are subject to market risk. Read all related documents carefully before investing.
गुणवत्ता की बात चली है, एक नई शुरुआत मिली है, परिवर्तन को गले लगाकर अपनाएंगे ज़ड। वोकल फॉर लोकल का नारा, अब एक ही लक्ष्य हमारा, आत्मनिर्भर बन जाने को अपनाएंगे ज़ड।
Register with Ministry of MSME's ZED certification scheme today.
Welcome back. Well, I'm watching a particular stock in today's trading session. That's Lupin from the pharmaceutical space. That stock should show up for you. It was down around 2.5%. Now, there are some concerns with regards to this because investors are watching for developments on the inhaler drug Spiriva generic. Now, the company already received a priority review from the US FDA for this drug last quarter. The target action date, which is when the US FDA is expected to actually give its verdict with regards to the application from Lupin, without an inspection of the company's facility was expected to be in April of 2023. That's what they had guided for in the previous quarter. Now, the target action date with the inspection was expected to be in July 2023. So now the street is wondering, because we're at the end of April, whether or not Spiriva Generic has actually gone through with the target action date, or whether they've missed the target action date, and whether, it's probably moved to July and there could be an inspection on the cards. So there is this lack of clarity which is taking place with regards to this particular drug. Now, the company has, however, indicated that they are getting ready for an FY24 launch. Remember, this is an important drug, $700 million in terms of market size. The company is the only generic company to expect to have launched the drug or will be launching the drug, and competition is not visible at least for the next 2 to 3 odd years. Lupin is estimated to make at least around $150 million from this drug if you assume a 30% discount with 30% market share. So that could probably even go up. But we need to take a short break. On the other side, Manisha Gupta will join in with an update on the commodity space.
Mankind Pharma Limited now makes an initial public offer of equity shares of face value 1 rupee each for cash at a premium. The 100% book-built offer being offered in a price band of 1026 rupees to 1080 rupees per equity share. Opens on 25th April 2023 and closes on 27th April 2023. For risk factors and more details, refer to the red herring prospectus.
चले
मामा जी घर चले
चले चले चले सांस भी नहीं लेने दी यार।
साफ हवा एंजॉय करने के लिए अब कहीं और क्यों चले, घर पे ही रुके। वोल्टास का नया प्योर एयर एडजस्टेबल एसी विद HEPA फिल्टर, ये जर्म्स और पोल्यूटेंट्स को फिल्टर करे और दे साफ ठंडी हवा 6 एडजस्टेबल टनेज मोड्स में।
तो हवा और सेविंग्स दोनों टन-टनाटन।
Whenever I had ice cream or cold water, I would experience a sharp shooting sensation. So I just kept ignoring it. Even my hot chai was giving me the same amount of discomfort. My dentist recommended Sensodyne. So now I can be completely carefree and sip my hot cup of tea. It really works.
That's the boss's cabin. The canteen is behind. Morning, ma'am. Morning. And you are here. Good morning. Good morning.
मैम और कोई ऑप्शंस?
लाइफ में और कहीं ऑप्शंस मिले ना मिले, मोतीलाल ओसवाल आपको देता है ऑप्शंस ट्रेडिंग में ऑप्शंस। इंट्रोड्यूसिंग मोतीलाल ओसवाल ऑप्शन स्टोर विद अ वाइड रेंज ऑफ ऑप्शंस इन ऑप्शंस ट्रेडिंग। एक्सप्लोर करो ऑप्शन स्टोर। Investment in securities market is subject to market risks. Read all the related documents carefully before investing.
Welcome back, and joining us on the show now is Jonathan Barad. Jonathan, hi, thank you so much for joining us. And today is the first quarter GDP numbers from US. We also have the jobless claims, and then it is going to be about the US Fed meeting next week. How are you looking at these events, and what's your sense on what the metal prices would look at it?
Manisha, good afternoon. Look, I think it's going to be quite, GDP will be quite interesting. I think as we go into May 3rd meeting for the Fed, the market is looking for obviously another increase of 25 basis points. I get a sense that it's really going to be the wording around that will then dictate a lot for our commodities markets, whether or not we've found a base in some of them or whether or not we're going to head lower. I get a sense that the market wants this to be the last. And if we get that out of the way, then I think we'll see metal markets start to make a move to the top side. Any hint of the adverse, then I'm afraid she does go down.
How do you look at the coincidence that it is the Golden Week holidays in China in the next week?
Well, let's see. I guess we'll lose a lot of liquidity. There's no doubt about it. So we could basically see some more volatility come to the plate. I guess when you see liquidity dry up, you get exaggerated moves. And as a result of that, you is the market really trading to its full potential. But I guess with the holidays, really it's see the world's largest economy, see how that dictates prices. We will know that obviously in China, things are looking a little bit better than they were, but yet some of the commodity prices still haven't picked up. we look at China obviously in towards its importing of oil. We haven't seen that. For instance, for oil, we haven't seen prices move on. In fact, they've come lower. So yes, I think let's see what happens next week. But I get a sense that it's the wording of what the Fed reveals its 0.25% increase and what comes next.
Jonathan, most people within the metal space have been favorable of, even bullish on copper. And look at where the prices are, 5-week lows and 5% down on week.
Yeah, look, I think that's quite a surprise. You're still seeing a market that is in a bit steep backwardation. So we've still got supply issues at the beginning, at the front end of the curve. When you look throughout the rest of the complex, aluminium, nickel and the like, you've got a great contango. That indicates that demand further out the curve is quite solid. I get a sense that obviously it is all about China. We really have to see what happens there. But when I look at copper, it's been a play that we've been looking at for some time and actually long. It has been a play that we feel that given the crunch in supply and the tightness in supply, that if we do get a sense of blue sky in terms of how the economies will start to form, then I see that metal has a lot more to go to. It is trading right on support at 8,500. So expect it to hold here. It is a very important level. It breaks here, it goes low, but I think the tightness in the market will see dips well supported.
Anything besides copper that catches your eye within the metal space? Because almost everything is trading in the negative. Aluminum at 2-week lows, nickel at 2-week lows, zinc at 2-year lows, even as the inventories are at 1989 lows. So when you look at the individual fundamentals, they are supportive. But I think it's all about macros right now.
Oh, look, undoubtedly, you're 100% correct. It really is that sentiment which will drive. When you do look at the aluminium, the nickel price, they're right on support as well, just like the copper. We could see a potential for a double low, but I think any dip will be well supported given where we feel the macros are actually feeling. There are obviously concerns in the US about the banking financial crisis. We certainly get that. But generally speaking, I think that it hasn't been too much of a weight on markets and demand. We did have some negative confidence number out of the States, but generally I think the States will want to lead it. Let's see what happens. Let's see how Biden goes with his new announcement that he's running for president again.
Oh, yes.
Okay, all right, Manisha, as well as Jonathan, thanks very much for joining in. Well, on that note, we also have to wrap up on the show. Thanks very much for watching. Business Lunch up next.